It's the Shakeout before the Bitcoin breakout. Hey guys, it's Keith Allen back from a great weekend. Hope you had a great weekend too. My gosh, the Bitcoin price action and a bunch of altcoin price action was good to a lot of us. Hope it was good to you. But I got to tell you, some things never change. One constant in this game is that over-leveraged speculators get punished time and time again. And in the process, unfortunately, overzealous, impatient, button-pushing spot traders get caught up and punished too. Don't let it happen to you. I'm going to show you the signs today that can maybe help keep you from letting that happen to you again. I mean, let's face it. Bitcoin fundamentals are as strong as they've ever been. Price has been flirting with, another run into all-time high territory. We've been waiting for this for months and months and months and months. And then, boom, we get a rejection last night, a hard rejection after, quite frankly, a phenomenal green weekly candle close. So, the signs are there. And I'm going to urge you again to just tune out all the noise, ignore the crypto bro narrative of the day, and just focus on the charts, because the answers are literally in the charts. It's staring us in the face. And quite frankly, if you were caught off guard by last week's pump or last night's rejection, then maybe you need to spend more time looking at the charts. And yes, we get a lot out of the candle charts for sure, especially, the technicals. But when you can marry that with order book data, I just think you have just an unparalleled set of tools to help you figure out what's going on. It was really clear and clean as day in the order book. I'm going to show you that. So today we're going to, of course, look at the candle charts like we always do, but we're going to take a deep dive into fire charts and show you what I'm seeing in the order book that could have clued you into what was going to happen, because I promise you, I expected that rejection from 69K, and I'm going to show you why. So for starters, let's head on over to the candle chart while I'm fumbling my way around the screen to find that for you. Do me a favor. If you haven't done so yet, be sure and smash all the buttons, especially the share button and the subscribe button, so you don't miss any of these future streams, okay? And by all means, keep the comments coming. Live chat is open, by the way, on YouTube. If you're watching on YouTube, if you're watching on X, heck, come join us on YouTube. And you can engage in the conversation. I love the feedback. I love the ideas and the questions you guys share. So by all means, keep them coming. Let's head on over to, let's see. I said we're going to start on the candle chart, and we'll start there, and then we'll go to what is what's happening in the order book as well. Okay, so obviously, big green candle here yesterday, right? Closing out the week, what was that? Almost 10%, almost a 10% candle last week. So hey, maybe we're finally getting into the October, quote unquote, October swing. But that would be a crypto bros narrative. So we're not going to talk about that. Instead, we're going to talk about, well, the squiggly lines on the charts. And as you can see here, we have one level in particular that we have engaged with so many times since we first came back to these levels back in March of this year. And if I take it to the daily chart, you can see I'm speaking, of course, of the 2021 top, 69K. And look at the number of times we've flirted with this line. We've had a couple of candles and certainly lots of wicks above it, but nothing has been sustainable. And I have been saying since this time that since we made this all-time high, which to me was a bit of a fluke, but nonetheless it happened. Since we made this all-time high way back then, and I'm going to clear out the trend precognition signals and just go straight bare bones into the raw chart so we can see it a little bit better. This level has been tough to break, and I've said time and time again, I don't think that any move, regardless of how high the wicks go, I don't think that any move will be sustainable until we're printing full candle bodies consistently above this level. And we've had very few along the way that have done that, right? We had, of course, our first, run up. We hit it. We rejected. We came back. We rejected. Took another couple of days to get up there. We finally broke through it, got that new all-time high, and then the breakdown, right? But look, pretty much almost all these candles, except one, wicked it back below. So I viewed that as weakness. Yes, it's strength when you go up, but it's not sustainable strength when it's just a wick, right? And so The wicks down were always a clue that we were going to break down again, which of course happened. We came at it another time, wick through, one full candle body, and then a wick below, another wick, one full candle body, and we had a couple full candle bodies here before things broke down. So you need to see that sustainably, and obviously you would want to see weekly candles holding up above that level to really get a more confidence in it. Right, another breakdown, more wicks, more breakdowns. You get the picture. It's happened dozens and dozens of times since March. And, we've been out of that range for a long time, consolidating down here. And finally, we feel like, hey, maybe we're breaking out of this lower consolidation range and moving back towards this elevated side of the range. Um, and and sure, there was certainly a thought that we might break above that. But there were clear signs in the order book that this was not likely to happen. And I'm going to show you exactly what I'm talking about. When we head over to fire charts here, you can see we've had, obviously, for a long, long time, we've had quite a bit of resistance at the 70K level, right? And it got even stronger coming into the close yesterday. It got even stronger here, right? At one point, um, upwards of almost 78 million just at that one level. And obviously more stacked above it, right? Another 30 million here and another 13 and another 30 and so on and so forth. Hundreds of millions laddered up to 75K, right? So and the support's just not there in terms of bid liquidity. There's some, obviously we have some here in this range that's holding things up right here, but it's not as dense as you want, right? We saw this. This was what, back in the beginning of the month. We saw this bright spot here of about 47 million. There was an indication that things would move up, and they did. But there's just we say time and time again, there's no straight lines in trading, and there aren't, right? So you have to keep that in mind, that we're going to have an ebb and flow time and time again until we get that breakout. As we zoom out to higher time frames, you can see this was really our bright spot in September. This is the one that we thought was going to be the pusher, and so far it has been, right? And we're protecting. We've made since this a series of higher lows and higher highs, trying to get obviously up to taking out these highs, but it has to start somewhere, right? So our dip down to that 49.5K level was at this point our lowest low. And we have a higher low, another higher low. We had a higher, this is our first higher high. This is our second higher high. And if we can continue on this path and on this trajectory, we're good, I think. And it will eventually happen. Again, avoiding the speculation of whether or not it will happen before or after the election. I had been saying for a long time, I didn't think it would happen until after the election. Obviously, with the momentum that we saw last week, there was some thought that, hey, maybe it could happen before the election. Again, we can, if we just put that out of our heads and look at the charts, we can know that it's simply, if we look at the liquidity in the order book, it's simply not time yet. I mean, look at this. All of the heaviest concentrations of liquidity are stacked overhead. We do now, granted, we have a nice ladder here. This is respectable, but without it being a real bright spot to push, we're at the mercy of what's happening above us for the time being. And as you can see, right, some selling occurred, some profit taking. That's absolutely normal. Absolutely normal to have some profit taking in this game, right? Unrealized gains don't do you much good. So if you're trading or trying to generate an income, you do have to take profits from time to time, and this would have been a realistic and reasonable target for that. In terms of 70K, I personally think 70K is more psychological than technical at this point, right? 69, this 2021 top, is the technical one for me until we get into these higher highs, just around 72K. It's actually 71.9 and change is our next set of really important highs that we need to take out, and then we can work on this all-time high. So in a nutshell, no straight lines. Yes, we are obviously seeing things break this trend, the local trend a bit, and that's happening across the board on a lot of alts as well, right? Like ETH as well. But you see this another breakdown below that 100-day moving average, right? We've seen some moves that look promising, but we've yet to see the real breakout move. Let's look at Litecoin. Okay, here's another one. This is what I'm talking about when I say some of these alts seem to be developing a breakout move, but not just yet. Solid rejection here from the 50-week moving average, and you've got more to go. The point is, don't expect a straight line on any of these things, right? Be patient and be careful with your leverage. I personally don't trade with leverage, but even in my spot trading, I don't go all in on any position, right? I build positions. I buy dips, I buy corrections, and I build positions, my longer term positions that way. And that to me is the safer way to do it, because it's really, really hard to pick those absolute tops and bottoms. And now more than ever, right? I'll be honest with you. There were many times throughout this range that I thought price would go back and retest all these levels, and it never happened, right? Fortunately, I'm holding a little bit of coin from each of these prior consolidation ranges. I'm not holding as much as I'd like from this 50K range. We didn't spend that long there. And while we did go back and retest this briefly, I did sell a lot of what I bought at these levels because I thought we were going to continue to go down. And I was just trying to generate something while we were in this seemingly endless chop. Now I do kind of regret that. I mean, profit is profit, so that's all good. But in hindsight, I wish I hadn't. So at this stage, for me, and this is for me, you got to do what works for you. For me, my targets are much higher in terms of sell targets, and my invalidations remain where they have been. For me, as long as I'd love to see price stay above this 2021 mid-cycle top, because that would maybe position us for this move sooner than later. But as long as we hold above this 21-week moving average, I'm confident that Bitcoin will eventually grind its way out. If we lose this level, then the 50-week moving average is my next downside target. That's right there, currently correlated around that 58K level, and that 58 to 60K range is obviously an important one, right? It dates all the way back to that first distribution around the 2021 top. So as long as we're above that, I'm good. I mean, quite frankly, as long as we stay above this lower low, a double bottom out of there would be fine for me. Even taking it to the trend line, this would be, and I really don't, this. Listen, everything is a possibility in crypto, but I don't know how high the probability is of going down this low at this stage are, and as well as going down to the 200-week moving average. This was my prime target for a really long time, and it's just seeming like less and less like the probability of going there is that high. It could change. It could change in an instant, and watching the liquidity in the order book might give us some clues to that. If we drill into some of the lower time frames, we can see we do have some consolidation here above this 65K level. Obviously, that mid-cycle top is right there, just sub this. So this is kind of defending that mid-cycle top level right here for now. And if that breaks down, you've got this 58 to 60K level that we had just talked about. Below that, let's see if we can. I guess I got to zoom out to see more of that. Let's go to the long-term chart here in Fire Charts, and you can see not a ton of liquidity down there. Yes, we do have a ladder, and we do have bids all the way down to that 38K level. But I think this is really a low probability move at this stage. Biggest concentrations are really in this 58 to 60K range and this 65K range, 65, 66.5. Those are the biggest concentrations. So I would not be surprised if we hold above this level. And that would be, like I said, that would be a good indication that price will consolidate above here. And I said this, if you go back and listen to any of my prior analysis, especially the recent ones, we talked about consolidating above this 2021 top, or mid-cycle top rather, before we then go after this 2021 top. And to me, that would be the healthier move. What could happen within this time frame here in terms of the liquidity that sits above is we could conceivably see some of what's stacked here at this 70K level and higher. We could see two things happening, or three, I should say. We could see some of it start to move down, right? And let's see if this was actually a move. Not so much. This was new. This didn't come from here, anyways. Doesn't seem like. We could see it move down. We could see it move up, and we could see it get pulled. So either way, I either want to see some erosion from this range, or more bids moving in or stacking above the 65K level to push price up. It's got to be one of the, it's got to be one of those scenarios. But as it sits, I think it's going to be very difficult to push through this organically and have it be sustainable unless we have more bids stacking in this range, and or some of this moving out. Whether it moves up, whether it moves down, or gets pulled altogether, remains to be seen. But I think we're going to see a change in the order book dynamic of the liquidity dynamic in the order book before we actually get that sustainable move to the upside. You can see this dip, getting bought here by purple whales, which is a good indication. It doesn't mean that they're not okay with dipping lower. You add to that position. The way I'm doing it, anyways, is adding to my position on these dips. So that's really my overview. The long-term outlook unchanged. I think it's as strong as ever. And just based on what I'm seeing in the charts, I think it's good that we consolidate above this level. I think that a consolidated move, a consolidation period is better than a straight rip. This is a 10% candle. So fading back to this level a little bit, absolutely nothing wrong. Even if we come back and retest this level, right? I had said all along, we got to watch those wicks. Well, first week we wicked above. Second week we wicked below. Third week wicked below. Doji wicked above. And now, this candle started just above, wicked below briefly, and now you have kind of the same set of circumstances. So I think this is all part of a shakeout, that transfer from stronger hands to weaker hands. And if you're over leveraged, you're going to get punished. If you are a frequent button pusher, nothing wrong with that, right? If you're trading, nothing wrong with that. But you've got to be prepared to either go through some drawdown and dollar cost average your position, or take profit early and run tight stops. And I think if you're running tight stops, you're going to get punished. So, you have to do what works for you. For me, it's identifying these levels. And these are my, I just showed you the 21 week, the 50 week, potentially this double bottom range, and obviously the trend line are the levels that I'm really watching the most. And I mean, if we got a trip back to this trend line, which now sits at 50K or just shy of it, I mean, that to me would be the strongest place for a foundational support for the next leg up. It absolutely is a possibility. I just don't know that we're going there again, right? I would love to see a pullback to this 21-week moving average without wicking below it and holding above it, and then start to build above this mid-cycle top. Maybe that's what's happening right here. This candle might be the one that does it. Obviously, it's early. We'll have to see how things progress from here. But staying above either of these levels to me is solid. A solid sign that there's some technical strength in the chart, and we just have to see the the liquidity kind of match that, right? Because We're not seeing a heavy concentration here of bid liquidity in this near range. Sure, there's some, and that's notable, but not a ton, right? And you've got a lot to push through. Also notice that this isn't just dense with ask liquidity either, right? So don't be surprised that if we do come up and flirt with 70K again, if we don't start seeing some of these things move. Likewise, if this bit of suppression here holds up, I think this is maybe placed to try and attract some shorts. And we can take a look. If we look at the Kingfisher chart, there's not a lot of shorts stacked here. As you can see, shorts have been closed. Last week, we looked at this. A lot of shorts have been closed. So there's not a lot of exposure here on the leverage side, at least according to this chart. That may change, could change quick, but it looks like the low-hanging fruit is in this. What are we at here? 64.5 to 63K level. I think that's ripe. That's ripe to get plucked. Whether it happens or not remains to be seen, but you certainly can't rule out the opportunity or the possibility of that happening at this stage. If you are subscribing to the up-only narrative, I could tell you that one is going to get you killed. So that's not a sound and safe strategy unless you're just here, Michael Saylor style, for the long haul, and you don't mind riding through the volatility. And quite frankly, his strategy is paying off for him, no doubt about it, right? So in the long game, especially with where things are trading now, it has been, buy and hold has been tough to beat, right? Now, remember last week we had a little bit of shenanigans in here with some liquidity moving around. Let's see if that continues. Looks like the last move from that was down to this 65.5 level, right? So let's see if this holds or if we get more gamification when it's all said and done. Looks like we have at least a decent ladder down here to this 65K level. And like I said, that correlates perfectly with what we have in the chart here at this 2021 mid-cycle top. Going to leave it right there, guys. Hope that gives you some insight. We've got, should be an interesting week. And quite frankly, I think it's going to be an interesting few weeks until we get through the election. But nonetheless, I'm sticking to what I'm seeing in the charts. I'm not speculating on, I don't care in terms of Bitcoin price. I don't care who wins the election. I think there's going to be a short-term knee-jerk reaction to whatever happens at the election. And then as we get into, 2025, by the time we get through Q1 of 2025, I think Bitcoin is going to be on whatever trajectory it was going to be on, regardless of who was in the White House. And with that, I'm going to wrap it. I'm going to give you one more reminder. Actually, if you're interested in any of the tools I'm sharing, in this instance, we pretty much just looked at fire charts. Head over to materialindicators.com. And if you haven't done so yet, be sure and hit the like and share and subscribe buttons. Appreciate that. Santos, almost on time today. Don't sweat it, bro. I appreciate you following along. I appreciate the support, and know that this video will be there for you to watch in real time. Will be there for you to watch on YouTube and on X until the end of time. Going to wrap it, and hope you guys all have a fantastic week. Let's trade smart. Let's trade safe, and let's make some money. Have a good one, guys.